One of the other big areas, if you look at blockchain, it's all about data. And Morningstar, Chicago firm, local firm, has done very well in gathering data, analyzing data, and is now taking a lead in the blockchain space. So I'm looking around and I'm looking for Kai. Kai Wu, where are you? Oh, there you are. Kai, come on up. Give us an overview of Morningstar and what they're doing in the space.
All right, so I believe I'm the one keeping you from lunch, so I'm going to keep this as long as humanly possible. I'm just kidding. So what I'm going to try to do here is run quickly through these slides. It's probably going to take about 20, 25 minutes, and hopefully we'll have a little time for questions at the end. So thanks again. My name is Kai Wu. I am the program manager for blockchain initiatives at Morningstar. So I'm the one organizing our strategy around it, and also I double as a subject matter expert on blockchain. So the presentation I have for you today is a little unconventional given the previous ones. Instead of talking to you about Morningstar's use case, I'm going to take you through our thought process for designing a strategy, and specifically around how we're strategizing around the prospect of public blockchains. So that's going to be an interesting piece here. So before I get too deep into it, a quick overview of Morningstar for those of you who might not be familiar. Morningstar, as you know, is an investment research firm. We're most well known for providing ratings on mutual funds, stocks, and bonds. But we're also a data and software company as well. That's a really big part of our business. And so why we care about blockchain is that not only are the companies that we're covering potentially disrupted by blockchain, our company as well has the potential to be disrupted as well. So we want to make sure that we're the leaders in this space, that we're actually on top of new developments as we move forward. Another small piece that is not as well known is that we recently bought a platform called PitchBook, and PitchBook is a platform that specifically deals in venture capital and private equity deals. And as you might expect, blockchain has already had a really big impact in the space, and there's already an analyst that is regularly covering the space as we speak. So on the left, you'll see just a couple of articles that we've written so far on the space. So, formatting here is not working out so hot. Hopefully it doesn't continue that way. So before I get started, a couple of just brief disclaimers here. So as of now, Morningstar doesn't necessarily have an official quote-unquote position on blockchain. What I'll share with you is a little bit of our research in the space, but we're still working on both how we want to deal with the industry and also what our internal use case should be. Right now, an obvious use case is doing it for research, and we already have a number of analysts who've both previously looked into it and also are currently looking into it. But as far as creating some way to deliver our data, that's an area of opportunity we're continuing to explore. And lastly, I think this should go without saying, but this presentation doesn't constitute investment advice. Not only is it a bad idea to take investment advice from a 30-minute presentation, it's also illegal for me to give. So please don't do that. All right, so let's talk about blockchain disruption. So we're all here because we believe that blockchains can be very disruptive to the industry. And so when we talk about disruption, typically people are talking about the public blockchain, not necessarily the private and permissioned blockchains. For private and permissioned, while there's very powerful use cases like we've heard already from Microsoft and IBM, public blockchain really represents something different. It represents an ability to commodify some digital services that we've traditionally taken for granted to be served by giants like Amazon, Google, and Facebook. So it's fundamentally something different. So I think there are really two ways that people have started approaching this new idea of something different. On one hand, you have a lot of the enthusiasts, which I'm sure a lot of folks in this room are the enthusiasts. They believe that public blockchain in particular, can disrupt hundreds of billion-dollar markets, even trillion-dollar markets. On the other hand, we have our skeptics, right? We have the folks like Jamie Dimon, who called Bitcoin a scam, and other folks who simply believe blockchain's a bubble. And if you look at the very unscientific method of just looking at Google searches, the results for blockchain disruption and blockchain bubble are actually pretty even. So the jury is still out for public blockchain. So take a moment and try to put yourself in our shoes when we're trying to design a strategy. How would you go about thinking of what our strategy should be for public blockchain given the uncertainty? And I think some folks may want to say, okay, there's nothing we can do. Let's just see what people figure out and move forward. But I think the point of today's talk is that there are things that companies can do, and there are things that we would want to do. It's just a matter of thinking a little creatively about how to handle the uncertainty in the space. So when we think about, oh boy, shouldn't have used so much custom formatting here. Try to get too fancy. So when we think about what are the three main uncertainties in the public blockchain space? So we all know that public blockchain is still a work in progress. And I would say there are really three main areas where we would need to see additional improvement for us to say it's enterprise ready, right? Scalability, regulation, and security. I'll talk a little more about those three in just a second, but I think we all can agree here that those three areas are very important for continued development. But the challenge here is that in order to better understand what the impact is, we have to look past these three aspects. And I think the way to do that is to actually think about it from more of an investment perspective, right? So whenever you think about investment, it's not just the probability of something happening, right? That's what's important. It's also the potential impact if it does happen. So let's say, for just throwing out an example here, let's say, for example, there's a 5% chance within 5 years public blockchain will get those three things figured out, right? If the market that's created is a $1 trillion market, that's a $50 billion investment opportunity today, right? So, and this is really analogous to the type of thinking that you see from VC firms investing in these tech startups, or even on the flip side, if you're a construction company building earthquake-proof buildings along a fault line, right? You're really just protecting yourself on what we call tail events. So events that may be rare and may not happen in the next 5 years, but if they do happen, are very impactful, right? So the idea here is, how impactful will it be if public blockchain succeeds? And that's really what we're here to discuss a little further today and see if we can dive deeper into that question. So, all right, this formatting, you'll have to bear with me a bit. But, so, back to what I was saying. So, in terms of moving past these, the fundamental uncertainties of the area, I mean, it requires us to first start with some assumptions, right? Assuming that scalability, regulation, and security are all fulfilled, right? And going quickly between these three, in scalability, really right now the transaction throughput is not very good for public blockchains. But let's assume, for the sake of argument, that they can process thousands, if not millions, of transactions per second. Not only that, regulation is also a huge problem. As people have mentioned before, China has recently banned exchanges within their country. And that's a big problem, but what we want to see is more support for public blockchain. So that's assumption number 2. Assumption number 3 is security. So security is really a sister of scalability, where as we grow as a blockchain and as it continues to gather throughput, we want to make sure that it continues to stay as secure as it currently is. So let's say these 3 things happen. What kind of world would it create? And that's really the type of questions that we're starting to think of right now, right? So in this slide, I have a few examples of a couple of upstart blockchain apps that are competing against, or potentially competing against, some incumbents. So you guys all know the companies to the right, but a little more about the companies to the left. So these are your blockchain app competitors, and just your typical profile. These tend to have very small teams, less than 50, even less than 25 people. They've raised anywhere from $10 to $100 million, and one thing to keep in mind, though, is that they're not for-profit companies. These are actually builders of public networks. So we have to think about them a little differently. They're not really out there to maximize profit. They're out there to make sure a service is somehow commodified in a way that wasn't before, right? That the services that someone like Amazon Web Services was providing now becomes an open marketplace. So what chances do the folks on the left have against the folks on the right in this ideal world, right? And that'll hopefully give us some color on, how likely it is that we'll see some disruption, and then further, whether or not we should take action based on that disruption. All right, so in order to chance the likelihood of a particular company, I'm going to dive into a few particular companies on this screen here. And just for the sake of time, we can talk about a few more if there's time afterwards, but let's actually start with the incumbents. So let's actually talk about Visa. So Visa is a very common example of people mention when they say, oh, blockchain is going to disrupt companies. When they say disruption, they're talking about Visa in a lot of cases, right? And so Visa, as you know, acts as an intermediary between merchant and customer bank accounts. And really, they're the largest payment company out there with $240 billion in market cap and a 58% of global share of transactions. So they're a gigantic company, right? So if you're in a world that blockchain succeeds, Visa still holds some pretty formidable competitive advantages that they can bring to bear within the payment space. So not only do they have relationships with every single financial institution currently and B2C provider, they also are a well-known brand name in the space. So folks trust them to process payments. And so they're more well-known than brands like Starbucks and Cartier, and according to Interbrand. And most of all, what this all creates is what we call a network effect, right? So this network effect makes it so that any new merchant who's coming into the payment space has to somehow integrate with Visa, right? Because all the customers are on it. So, and any customer who wants to get a new card or a new way of payment, they would want to go to Visa, because then you could get payment in any location, right? So what's interesting there is, again, pardon the bad formatting here, is that it's not just our opinion that these advantages exist. If you actually look at the stock returns of Visa in the past couple of years, and also the revenue of the company, you'll see that blockchain has really just been a bump in their road, right? Their revenue has actually doubled in the past 6 years, and in the past 3 years, their stock price has actually beaten the S&P 500 ETF by 70%, right? So it's not just our opinion that they're doing well. The market actually believes that there's a bright future ahead for Visa despite blockchain, right? So the question here is, okay, what can Visa do with all of this? What can a blockchain app do against these advantages, right? So assuming our ideal scenario, blockchain apps do bring a couple of great advantages up their sleeve as well. So a couple of things here is first, they really live on a platform that allows them to commoditize digital services. So I talk about that a lot, but what that'll mean is that it'll drive down the prices for folks taking these digital services, at least theoretically. It's also a trustless and secure platform, again, going back to those assumptions. And really, I think all in all, it would be a very competitive platform to build something on top of if an app just suddenly materialized on top of it and folks just started using it. But as we all know, that's not the case. And for the folks that work in a software company, we know that software just doesn't appear, right? We have to build it, we have to test it with customers, and we have to get customers to use it. And that's all very difficult stuff, and companies get it wrong all the time. And the challenges for an app is that, they face a lot of problems with getting customers to actually use the program, getting corporate companies to actually sign up for what the app is providing. And not only that, like I said before, they don't really have any source of ongoing revenue, right? There's no way for them to, after they ICO, there's no way for them to continue to get funding over time. And that poses a big problem, because let's say you want to scale, right? Let's say your network's starting to get a little momentum and you want to increase the number of workforce that you have, right? There's no real easy way to do that, because unlike a startup, you don't have multiple funding rounds. So that's just a big challenge. And really, I think the difficulties that an app has competing against incumbent, it's not something we should be surprised about. That's how Visa has been around for so long, and that's why we think that Visa will most likely continue to be around, is because there's just a set of competitive advantages that Visa has that builds into what we call an economic moat that's very hard to cross. So that brings us to an interesting situation, because a lot of folks here are either involved with blockchain apps or they're planning to build a blockchain app on the public space. So what is there to do? Is it that we just throw up our hands and say, okay, these apps are going nowhere and they're not going to compete against incumbents? Well, I think the answer here is actually to think a little more creatively about what we mean by disruption. what if we actually think about disruption in a different way? Thinking about it in a way that we're innovating existing business models, not just disrupting them and blowing them up. I think this one is interesting concept because while a lot of folks have thought about how to innovate or change their business model based off private and permission blockchain, very few have talked about how to do it with public ones. But even now, there already are a few examples of companies doing exactly that, which I'll go through one example in a second. So one example here is actually Omi Go. So Omi Go is actually a very prominent project, so I expect a lot of you have heard about it and know what it does. But I'll first give you a brief overview of Omi Go as a project, and then I'll talk about how it fits into a business model in a traditional sense. So Omi Go, yeah, this is a little hard to read, so I apologize again for the formatting here. So Omi Go right now is the largest Ethereum token by market cap. So as of the time writing this, I believe it's changed up a bit, but as you know, volatility in crypto is quite large. And it was started by some folks in Omi, and the purpose of this token is actually to secure a network for decentralized payment processing, right? And so, and that's just a way to overview it. There's a lot more complexity involved, but you can think of it as a way to actually process transactions between various payment networks. And what they aspire to do is actually to connect these closed payment networks by using Ethereum as an interchange currency. So the diagram on the left briefly just shows how it works. So if I'm a customer and I pay a merchant, what it'll do is that the merchant will then contact the merchant bank and then the payment network. And then the payment network through this Omi Go system can actually connect to Ethereum and then onto another payment network. So this actually has some really powerful use cases because if you think about it, let's say, for example, I have Venmo and I'm using US dollars, but I want to pay some with Alipay in renminbi. Right now, it's no easy way to do that, but if both of those vendors sign up for Omi Go, there'd be a way for me to make that communication. So that's a pretty interesting feature, but what's even more interesting about this goes back to what I was saying earlier of integrating it into an existing business model. See, Omi Go doesn't run independently. Omi Go was actually started by a startup, right? That was founded in 2013 over in Thailand. So this startup is actually using Omi Go as a platform for its own payment business. So it actually operates a separate payment business on top of Omi Go. And what Omi Go does for it is that it opens up a lot of doors. So one door is that you're now able as a payment company to accept from different networks, right? So you can accept payments from like Venmo, Alipay, much easier than you can before. And also in different currencies as well. Second, you're also able to take currencies from unconventional sources. So unconventional stores of value like air miles or loyalty points. There are actual ways to convert those things into payment for companies with Omi Go. So the point here is that Omi Go gives Omi a way to add competitive features to its existing set of features, right? So besides just being a payment company, Omi is now able to offer a lot of different things that it couldn't before. It may not become the world record that is Visa and eventually overtake Visa, but they're now able to establish a particular space within their local market in Southeast Asia with these specific features. So that's a pretty interesting prospect because, let me just see how we're doing on time here. Okay, great. So talking about innovation urgency, right? So if Omi can do it, why not other companies, right? And taking that perspective, why can't Morningstar or another company that you folks have find ways to innovate on the public blockchain space, not just the private and permission spaces, right? And there's definitely some monetary motivation behind this as well, right? So using the payment industry as an example, right now there's actually an ongoing lawsuit that's been gone over for a couple of years now. It's worth $5.7 billion. And what that lawsuit is that basically a lot of retailers are fed up with paying so much money to Visa and MasterCard, and they see a lot of non-competitive actions that are coming from them, right? And this lawsuit was actually thrown out of court because it was not, didn't reward merchants enough, right? So I think that goes to show that there's a lot of value that both Visa and also its competitors and even its customers can take from innovating in the space. If you're Visa and MasterCard, the idea is that you could potentially increase the number of features that you have, so you make your customers a little less unhappy. If you're a customer, say you're the Walmarts of the world, you can fund a startup like Omi Go, or you can even join the network that they're building. And then that allows you to then add some of these features to your own set, and then potentially disrupt some of the existing players in the market, right? So again, the point here is that for the payment industry, there's definitely very clear examples of how you can take the public blockchain and then integrate it into an existing business model. So the idea here is that when Morningstar is thinking about how to use blockchain, obviously private and permissioned blockchains are generally what enterprises go into first. But we want to still be thinking about the long term. What if public blockchain does become prominent in the next 5 to 10 years? And so based off what I just shown you, we've seen evidence that it would become a disruptive force if some of the technical and regulatory issues are figured out, right? So the idea here is that because even though that there's such a small chance or there's an uncertain chance that these things will succeed, but there's such a large impact, that gives us some justification to begin investing in it. It may not become half of our business, it may not even become a quarter of it, but the likely amount that's logical to invest in blockchain, in public blockchain, is likely greater than zero. So that's how we've started to actually think about designing our strategy, and hopefully that same type of thinking is helpful for you as well. All right, so that about sums up my presentation. Thank you. So any questions? It's a good question. Actually was ready for that question. So on the right is actually the way that a traditional payment network works. So you have your customer. Oh, sorry about that. So the question was, how does this startup's network compare against Visa's current network? So on the right, we have the right. Oh, sorry, the left here. Sorry, excuse me. On the left, we have Visa's typical way of doing business, right? So they actually serve as an intermediary between merchant banks and card issuers, right? And they're ferrying these messages in between them. And this is why people think that blockchain can just completely replace this. Because on a blockchain, the way it would run is that there wouldn't need to be an intermediary talking between these two. If there was a blockchain in between, there'd be just a way for them to communicate through that technology. What Omi Go does actually is interestingly, it actually adds steps to it, right? So it's not necessarily making it easier, right? But it's allowing for more flexibility. If, let's say, for example, you're placed in Southeast Asia and there isn't as much penetration for credit cards. It allows you to actually go between different networks and have more options to deliver payment as a customer or to actually accept payment as a merchant. So it's really establishing its own niche, right? And and Omi Go is using it. Omi is using Omi Go to establish a niche. And that's why I think it's powerful in its own sense. So hopefully that helped. That's a good question. And I think, okay. The question was, when do you expect to see production-ready applications on the blockchain? So that's a very good question, because I think right now, if you do some deep research into the actual applications, you'll see that they're not as ready as you'd want them to be. And so as of now, Omi Go is probably pretty far along, but it's released the most details for just having a white paper, right? There's no release proof of concept. There's no working software that you can actually see. So I would say at very least we're about, we're probably like 5 to 7 years off at least from seeing proof of concepts and then more enterprise-ready solutions. But the approach I would take though is actually, I was mentioned in the previous panel, is looking for triggers, right? So what are the types of technologies you want to see advanced that will say that, okay, this technology is actually ready for action? And that's kind of the approach we're going to take moving forward, is thinking, okay, these are the 3 things we want to see from these applications. And if we start seeing these things more and more, and they're becoming more developed, we're gonna say, okay, it's at a readier stage for us to invest in. So, other questions? Another question up there.
How do you differentiate the value of Omi from Omi Go's token? And how do we know, like, if you can invest in each, how do you differentiate them?
That's a good question. And I think, and the question was, how do you differentiate the value between Omi and Omi Go? Omi, it's really, you can think of it as a traditional startup. So companies have been doing this all for a long time, if you're in a VC firm especially, or your private equity firm. So the way you would value that company is using some of your traditional tools. What's the customer adoption rate? What's the revenue flow look like? And what's the revenue growth look like? You can use some pretty traditional tools to do that. As for Omi Go as a token, that's where it gets a little tough, because you're talking about valuing a token that's at the center of a marketplace, right? So if you think about the analogy I like to use sometimes is thinking about oil, right, or gold as commodities. A lot of folks have tried to predict the price of oil or the price of gold, and a lot of people have failed, right? And I think it's a slightly different challenge, but it's a similar difficulty in the ability to predict. And right now, there aren't very many good fundamental valuation models for something like Omi Go. So I think that's something we definitely want to look at moving forward. Great. Thank you.